Hi and good morning, everyone. It's great to see you and great to be with you this morning. Um, Sunny greetings from here in Cebu. We're very pleased to report our 9-month 2024 highlights. We're very thankful to continue establishing our leadership or cementing our leadership here in VisMin, and it's reflecting in our results. For our earnings growth, there's definitely sustained earnings growth. Our parent, NIA, grew 7% to 2.32 billion from the restated 2.18 billion, reflecting alignment with the updated PFRS standards. There is steady and I would say solid top-line performance across major segments. Consolidated revenue hitting our highest 9-month total of 14.11 billion from 12.93 billion in 2023, an improvement of 9%. I would like to really highlight this, as you've been seeing a lot of market reports about the Luzon or Metro Manila segment when it comes to condo or housing demand. At CLI, across almost 40,000 units we've developed and launched, we are 96% sold across all projects. And those that we've launched in the last 1 year are 89% sold. No? So if you're free, feel free to give a virtual applause, no? And we will make sure to pass on the applause to our team here at Cebu Landmasters. So I would say it stands out amidst some news that has come out recently in the residential arena. Fourth, stable balance sheet and improved debt to equity ratio. So this has been a main focus of our team, grants team. Improving profitability and successful issuance of preferred shares resulted in strong balance sheet as the debt to equity ratio improved significantly from 1.79 times to 1.44 times, which we're very pleased with. And as part of our recurring revenue push, we've opened 3 new hotels in the first 9 months of the year. This includes our Life Cebu City, our pad hostel and co-living space, and City Needs Bacolod that has quickly risen to become the top 3 hotel in the whole Bacolod city in less than 4 months. So at this juncture, I'd like to pass it on to Grant, my idol when it comes to finance. And he's prepared a very detailed report about our financial performance and some new material to further give confidence to what CLI has been doing well here in Cebu and the VisMin area. So Grant,
Thank you, Franco.
take it away.
Thank you, Franco. So we're pleased to report our 9-month result. And I think without going through all the details immediately, I want to preface and really set the tone for what CLI is trying to achieve in 2024 and really going forward. We've always been great at selling out our projects. We've had tremendous growth capturing market share. We've grown our balance sheet. And I think what the numbers will bear out starting in this period is that we have been intensely focused on making sure that we can complete our cash conversion cycle. And that, in other words, that while we're good at adding to our pipeline in terms of launches and sales, we're equally good at actually delivering on those pipeline. And we're equally good at monetizing those sales, as you will see in the numbers that we will show you. So we are reporting continued stable and steady growth 9 months this year, from our top line to our bottom line. This period, we are reporting top line growth of 9% from 12.926 billion in the same period last year. And these are adjusted numbers anyway, by the way, adjusted for the new PFRS standards. So you are comparing like for like numbers. So that's 12.926 billion same period last year. And this period, we're reporting 14.112 billion in the same period. This is a 9% growth from of our top line. That has resulted in a gross profit of 7.397 billion pesos from 6.893 same period of last year. And this has yielded a consolidated net income after tax of 2.913 billion from 2.833 same period of last year. To the parent shareholders, that's 2.3 billion pesos, up 7% from 2.18 billion pesos of last year. And I think what you can see in the numbers here is that we were able and we managed to derive this growth, and we were able to deliver on this growth while maintaining our margins. While the pressures coming are mostly external, meaning increased interest rate costs, as we can break down in our expenses, in our costs later on. I think you can see that our ability to slowly pass on the cost and to be able to transmit inflationary pressures into our selling price and still maintain our selling prices is what has allowed us to deliver on such growth. Now let's break down where our top line is coming from in the next slide. So we grew from same period, our realized revenues from 13 billion or 12.92 billion last year to 14.11 billion same period this year. And if you break down a little bit of who are our revenue contributors on the right side, you will see sort of a new player or a new business segment really contributing significantly to our top line or to our sales, and that is lot sales. No? So again, the yellow portions of the slide, the yellow portions of the slide is the Casamira brand or the economic housing brand. The dark green are the garden series. And then now you will see there is a blue wedge there, and that represents a lot sale, which is a strategic direction that CLI is taking in order to start monetizing and getting monetized value out of our township developments. So our first ever lot sale is actually our joint venture with the Japanese conglomerate entity, which we announced. And we're pleased to announce that even in this fourth quarter, as you might have seen in some disclosures, we have closed our very first lot sale in our Davao Global Township, which is the very first township that we launched several years ago. And this is a trend you can continue to expect, meaning that while it's not going while we don't intend to sell everything out, very strategically, we are identifying strategic locators who will help develop our townships on a larger scale. At the same time, when I mentioned that we are replenishing or we are adding to our pipeline, we're proud to show where our year-to-date reservation sales. So in the 9 months or in the year-to-date 2024, we have already secured 18.59 billion pesos worth of reservation sales compared to 20.56 billion for the full year last year. So once again, through the if you look at our track records through the belly of the pandemic in 2020 and 2021, we continue to keep selling out our projects. We continue to be able to deliver year-on-year growth on our reservation sales. Couple that with our industry-leading delinquency and cancellation rates. This is where we have confidence, or this is what gives us very strong confidence that we are able to complete our value creation cycle from sales to collections. And if you look at where our reservation sales are coming from, there is a broad-based recovery, but truly the housing units and the Filipino families moving up in the value chain where the demand is. And 54% of our sales this year came from the Garden Series or our mid-market offering. Still very significant is our Casamira, our economic and affordable housing brand at 32%, and the rest The rest is clocking in at just under 20%. And if you look at where they're coming from, you could see that our diversification and our expansion into other regions in Visayas and Mindanao is beginning to pay off, with over 54% of our sales coming from Mindanao. So how does this translate, or where does this lead our balance sheet to? So um, in CLI, we're still, this is something that most of you already know. We are very focused on our residential sales. We're still primarily a residential builder and developer. And this is what is contributing to our revenues and cash flow as we start building up our investment properties as well. So if you focus on our contract assets, and as well as our receivables, our inventories, these are the line items that dominate or that make up the large part of our asset base. Our total assets grew from 102 billion to 106 billion same period last year, which is it's a 5% growth. But at the same time, we've structured and we've improved our capital structure such that our debt equity ratio has improved from 1.79 to 1.44x year to date. And this is primarily driven by our recent successful preferred shares launch, where we simply replace some of the outstanding capital from debt into equity. Next slide, please. Okay. Now, I do always want to give further insight into our balance sheets and to how CLI is performing, because the balance sheet does not capture every single result, or some of the most important results that I think our investing community and our partners should be aware of. And that is our total contract to sell value, or the amount of peso value remaining that can be collected from reservation sales. And these are contracted reservation sales. So I'll just repeat myself from previous periods, that our financial statements is governed and is guided by PFRS standards, which factors in percentage of completion when we report our revenues, and therefore all the way to net income. But it does not necessarily reflect the market value or the market share that we're capturing every year and how it's accumulating. And what you can see here, and this is a slide that I think delivers the point quite well, is our strong sales from the previous years have led us to accumulate almost 85 billion pesos worth of uncollected contract value, by the way. So one way to think about the column on the rightmost side, 2024, is that in the next 4 to 5 years, and we can show you a breakdown of these maturities in the next slides, but in the next 4 to 5 years, we are slated to collect almost 85 billion pesos worth of receivables from contracts we have already signed up. So this is an evolving number. It's a dynamic number. We are still going to launch projects in the last 2 months of the year. So this will continue to evolve. But actually, you can see that we have been able to grow, or this is a function of our dynamic growth, capturing more market share and signing up more customers. And if you look at the aging of our receivables, or so to speak, 13.65 billion of this 84.64 billion is due for takeout in the next 12 months. This is a rolling number. So there's just a slight time. It's for takeout in 2024 and 2025. It's a rolling 12-month number of how much of these contracts are maturing in the next 12 months. And when we say maturing, these are contracts who are up in their equity payments to us. They've finished their scheduled monthly equity amortization payments, and therefore their balance is due to us already. And this coincides with the completion and delivery of their units. So we're in line to collect that 13 billion. And the vast majority of our collectibles, 70.989 billion, will be beyond 12 months, meaning this is the collectibles in our pipeline. And then you contextualize this number with our delinquency rate. It's at 2.58%, meaning that less than less than 3% of our buyers are behind on their payment. And take note that this is a quite a superior type of contract from a finance perspective, because the inventory still remains with the developer until a full takeout. In other words, there's no loss to us if someone cancels on a unit because the inventory remains with us. And then our cancellation rate, and I believe we're one of the few developers who will publicly and willingly share this because of how good it is. It stands at 4.3%. So it means that within the next 5 years, there's this number of contracts that could potentially get canceled. But why are we able to maintain a 97% sellout rate? Because the cancellation rate is mitigated with a waiting list, because of the high demand of our projects, because we quickly sell out our units. We know that there's a market that will absorb and that will catch any cancellation rates. So you take all of this into context, and you can see why, from a financial point of view, and when we analyze our cash flow and our ability to expand and go into investment properties, it's an incredibly strong foundation and base to operate from. Let me break it down with another slide just to quickly show you, just to quickly deliver the message and see it from another perspective. And this is the first time that in a long or in many reporting periods that we're actually highlighting our cash flow statement. And because this actually demonstrates and it belies what I've been saying earlier, that 2020, starting late 2023 and even 2024, the management of CLI, the entire organization, is incredibly focused and committed to deliver and actually complete our cash conversion cycles. In other words, to put it in practical layman's terms, we are finishing our projects, we are finishing our house and lots, our condominium units. We are delivering them to our buyers, and our buyers are fully paying us at a rate that is increasing. So if I may draw your eyes on the chart on the right, that is a chart of our operating cash flows. That shows also our 9-month 2024 operating cash flow. So what you can see is not only a trend towards the positive, but a quantum leap this year, which again, and it's showing. And our strategy is paying off in that our operating cash flow is now in quite a positive territory. In other words, we are already reaping and collecting the majority of the sales value of houses and units that we sold 3-4 years ago. And this has resulted in a positive operating cash flow of 4.44 billion year to date this year. So that's only in the 9 months of this year. You'll continue to see this. So as CLI has what I call this dual focus strategy of making sure that we not only add to our pipelines through our launches and our sales, we are equally good at actually monetizing and actually clearing our pipeline. And if you see the aging of receivables, this bears out. And again, this is the foundation and the base by which we can still grow our market share and our continued mission and vision to provide housing and shelter to Filipino families, but as well to become a more integrated, holistic real estate developer and start building our investment properties and recurring income portfolio. Next slide, please. So one more slide to really bring home the point before I pass you on to Franco to show, where you can really see all the projects and, where he'll give the business updates that shows how we're able to achieve this. We've been showing our debt maturity profile to show how well we're managing our debt maturity towers with our funders and our debt institutions. But we thought it's an interesting insight to actually contrast that with the maturity and the aging of our collectibles as well, no? Or our receivables. So how do you break down the 84 billion in receivables that we just showed you earlier? Contrast that to our debt maturity tower. So we not only strategically spread out our debt maturity towers so that every single tower, we're not going our refinancing risk, given the somewhat, the potentially volatile financing environment, interest rate environment out there, that might pose a risk to our strategy. But you could see that just on our collections alone. And these are, again, these are from signed up contracts. These are not sales projections. These are already documented, locked in sales contracts with post-dated checks and buyers who are waiting for their units. The green bar, which represents the aging of our collections in the next 4 to 5 years, every year is greater than the potential or the principal payments scheduled for each of those years as well. So this means that not we don't even have to rely on refinancing. And in order to do that, refinancing is simply a bonus strategy for us to be able to use internally generated cash flow for further capex like acquisitions and expansion into investment properties for to build up our recurring income portfolio. So if you have questions on this and if you'd like me to provide more details, I look forward to answering your questions later in the Q&A. But in the meantime, for our business update and significant milestones, I'll pass you back to Franco.
All right. Thank you very much, Grant. Thank you for always comprehensively presenting our financial report to our analysts and to our shareholders. So at this point, I'll discuss the business updates. You can see here that CLI has been maintaining over 100 hectares of land bank. As you know, we have our acquire to develop approach since we became a public company. And in spite of that, we have been really expanding our footprint all over the Visayas Mindanao. It includes the recent acquisitions of General Santos and Butuan in Butuan. So, and as you can see here, the acquisition in Butuan already moved to selling and development with a very busy land development on site. I want to highlight that there is 48 hectares in the immediate pipeline. When we say immediate pipeline, we are working on the acquisition currently and looking at closing this within the next 6 to 12 months. And that will add to the existing land bank of 876,000 square meters. Next, please. In terms of CAPEX, we are on track to exceed our 2023 CAPEX, and 72.5% of this, of course, goes to residential development, 14.9% for lot acquisitions, and 12.6% for investment property. We're still finishing several hotels like our Radisson Red development in Mandaue, Cebu. We're finishing up our Mercure Hotel in downtown Cebu. And there's even a City Deans Davao. So that's part of the investment property there. And I'll talk more about our residential deliveries in the upcoming slides. So next, please. Yeah, so this is our portfolio with over 124 projects. The bulk is our 95 residential properties, our 6 office developments, 10 hotels, 10 mixed-use real estates. So when people approach us about this and how we try to explain it, we've really followed the demand. When we started development in VisMin, it was around the time that cities were getting busier and there was a need for better urban living options. So this drove up the condo demand. While at the same time, there was a chance to establish larger residential estates outside the city centers. And we have also been very conscious about offices and recurring income. Thankfully, with only 6 offices, we are not experiencing the impact of the current vacancy, high vacancy rates. In fact, we are at only very low vacancy rates because we've managed to retain all our existing tenants post-pandemic. So that has bode well for us. In terms of hotel, the good thing with CLI is we never stop constructing during the pandemic. So we are actually, in a way, taking advantage of for the next 4 years with only a few hotels opening. Some people forget that there were not a lot of developers who launched hotels in 2021, 2022, while CLI was launching a Sofitel or a Abaca resort, and we are opening these in 2 years' time. Well, you see a lot of hotel announcements now, but those are finishing in 5 years. So I would say we are excited to catch that demand or tourism comeback here in the Philippines. Of course, our mixed-use projects allow a good mix of for sale recurring, and of course, our estates give us that long runway for development. Next, please. So this is our residential performance with 11.81 billion in real estate revenue. I would just like to point out how sometimes I also take a step back and reflect on a 96% sold out rate. It's a terrific outcome for us. I hope it's also good news for the industry. I believe it's just really about establishing the good brand, the good ground game, as we call it. I always explain it. There's a lot that goes into development, and there's still a lot we can improve. I believe that attitude, that humble attitude, has helped CLI because we're always trying to improve the way we do our residential development. So next, please. It's controlling it. Okay. So in terms of our sellout rate of 96%, right? And I hope you can ask questions about this and how we've managed to achieve this, but this is full visibility of where we are now. When we say completed projects, these have been turned over. And maybe the 2% left there are some very slight reopened units. When we say ongoing construction, these are turning over in the next 1 to 2 years. And even the ongoing projects under construction are 96% sold. And the very strong statement we want to make here is the new launches just launched in the past 12 months are already 89% sold. And imagine these new launches have considered the new costing given the effects of inflation, have considered the right profit margins, to balance out the increase in costs the last few years. So we're very happy with this, and it gives us that motivation to look at more developments. Next. So these are our completed portfolio. Another recurring income from here is that we manage all these developments as the property management provider. So our CLI PM earns management fees for managing these properties, but beyond that, we have a 100% batting average. If it's in golf, it's a 0 handicap, meaning it's a professional player in the sense that we've retained all our properties as property management. It allows us to really protect our customers, our homeowners, for the long term. Next. So these are our construction in progress developments, and we're very busy turning over these projects soon, with One Astra turning over in the coming months. One Paragon, we're actually looking at turning this over by the end of November. Casimiro Homes Dumaguete has some initial turnover. Our Belmiro Heights in Agusan, this is in Teakwood overlooking the bay, will be turning over also next year. And Casimiro Ormoc has already some units we're turning over. So you can see the very strong operation that we have here. It's matched with the right human resources now to oversee, implement this. It's matched with the right financing strategies. It's matched with the right operational people on the ground to deliver these projects. So that's why you saw our operating cash flow registering the highest positive operating cash flow, because we're delivering, and we're paying out. We're basically we're reducing receivables and increasing our cash flow that way. Next. So these are, I'll just walk you through this, no, and you can see how these are the projects we've launched in the last 6 months. No? 99% sold. This is our Consolacion here. And then you have Mindara, which was a record in Davao. We sold 2.5 billion in less than a week. In Butuan, which is really a developing city, but I would say one of the strongest local economies we see in Mindanao. We're already 84% sold, no, after launching in March. You can see this Valmiro Heights, Davao beats all others. We sold out in 2 days. And this is middle market housing. And even with new product line, no, we started walk-up developments. This is around 30 kilometers from Cebu City. It's already 100% sold, and construction is already in full swing here. Next. Okay. So we'll talk more about our offices. So with over 41,000 square meters in gross leasable area, contributing to our books, we're delivering over 110,000 in the next 3 years. There's this strong growth of 47% in leasing revenue. And you can see here our under construction GLA of 70,000 square meters. Next slide. So you can see the leasing footprint expanding. No, I would say these are called important baby steps to prepare us, no, for the big steps we are taking in this space. We're very proud to have some notable tenants coming in here. The largest, I think, Seattle's best standalone store or drive-through store is in Davao Global Township. Very busy, and the first Dinan de Luca in the VisMin area just opened in our development, 38 Park Avenue in Cebu. Okay, next, please. Yes, in terms of hotels development, as I mentioned, we are not just announcing new hotels, we are opening them now, because we are one of the few who constructed hotels during the pandemic. So you now see our hotels count at 530. This was just at 180 a year ago. So imagine that's a lot of units now contributing. And we now see here, then we still have 1,198 more under construction. There's a 52% growth in our hospitality revenue. Next. So this is it. You can see 148 million pesos already this year. And this does not include the very busy holiday season that we are having this October to December, especially with our Citadines Bacolod City here. Really very busy as a MICE hotel with, I would say, the most premium hotel offering now in Bacolod. And then Life now getting more bookings, and our Depad co-living also rising in its occupancy and revenues. Then next year, we are looking at opening Radisson Red in Cebu, Citadines Paragon in Davao, and Mercure hotels in the downtown area of Cebu. And in terms of estates and townships, we've talked about this really being our giving us that long runway with multiple areas that we can develop within our own townships. And Grant talked about a major milestone we had, having our first lot sale within our township as part of our strategies for this year, now where we welcomed Insular Life as one of our co-owners, as one of our major tenants in the Davao Global Township. Next. So you can see here a lot of simultaneous development. So our city center, which is highly anticipated by the Davao residents. This is opening very soon, starting with our retail pads and our park. In time for the Christmas season, we will be opening the park here. You can see our practically sold out East Village, now rising towards the 6th to 7th floor. And the building 5 to 6 were nearly sold out. That's why we're positioning for that next West Village in the DGT. Next, please. I'll now move towards significant milestones to report. So this is a very important update for you, that CLI has even increased our market share. No? So the leading market share in the Visayas belongs to CLI, and it's now at 90%. This is in terms of the number of units brought to the market. So you can see here in net sales and even absorption, we are leading in that category as well. Next. Yes, we sometimes get very shy about these awards. When it comes to these awards, now we like to just perform, and if there's an award, we're very happy. But of course, we're very honored to still receive awards from the Property Guru. We have continued to be on the top 10 developers list in the Philippines from BCI Asia, and we're very proud of the continuing good governance push with our repeat 2 Golden Arrow Award as a top performing publicly listed company in the Philippines. And there's other awards here from the World Business Outlook, Asia Pacific Silver Stevie Awards, and ACES Awards. It's filling. You can see our cabinet on the right.
Behind us.
So we're very happy with that. So we welcome proudly Insular Life, no, who have established themselves as one of the leading companies and insurers here in the country. We're very proud to have welcomed them as our locator and investor in the Davao Global Township. And they will benefit from the improved valuations, from the long-term vision of the Davao Global Township as the premier CBD in Davao. Next. So we've been busy with hotels, and I always tell people that hotels are hardest to build because you have to think about everything up to the pillow or up to the chair, so that you have to fit out. But I would say with 4 hotels that we've opened, we've also been getting better at it. Now we have to plan your procurement strategies way ahead of time. You have to plan your opening targets way ahead of time. So these are the three new hotel assets that CLI has opened. Next. And well, with this one, maybe about growing shareholder value. I believe among investors, it's very known that CLI has generously given back to our shareholders. We've already given back over 3.14 billion in dividends since 2018, so that our growth is felt now by our shareholders who've been with us since the start. I think that's the attitude we will continue to exhibit or to carry with us, that we take good care of residents, we take care of our suppliers and contractors, we take care of our shareholders. That's always been our commitment. As for the next part, so at this point, I'd like to thank you again for listening to us. We are really excited to answer your questions, and I want to assure our investors, our analysts, that we are still very busy. We're very working hard to finish 2024 strong. So thank you very much.
Right. Thank you, Franco and Grant. We now ask the first question. The first question is, other national real estate companies from Manila are entering the VisMin market. How concerned are you about competition?
Well, we're actually I'm a believer in healthy competition. It gives our buyers here more options, and it allows us developers locally to level up our game. However, this is really our turf. I would really believe that CLI is able to move faster. CLI is able to price it better. CLI is even able to construct at better efficiencies because we are really locally entrenched here. And it begs the question, why are they here? They probably notice what we're doing. They 96% sold across all our inventory. They know that there's demand here and there's no oversupply here. But beyond just coming here, they really need to know if they're developing in the right areas. They need to know the price sensitivities of the Cebuanos, of the Davaoenos, and that's something that CLI holds close to our chest. But we're very happy. I think Shangri-La just launched here. Rockwell just launched their tower. I believe the MCI is even launching their first project, and it's welcome, no? It's economic activity for our city, good for our economy, and but as I said, we're running out of inventory too, so we're also excited to launch more with them here.
So I'll add to that lang, Franco. So it's not just Philinvest, right? You're right. It's Rockwell. Ayala's been here several years. Philinvest too. Arsalan is here. Shangri-La just bought a property. So not only does competition keep you on your toes and keeps you sharp in terms of your product delivery, don't underestimate, especially in real estate, in the real estate industry, the power of economies of scale and why having a critical mass of developers in a particular market is incredibly powerful and lifts all boats. So if you think about the effects of having more industry players, that means more suppliers will have to build up their capacity. It means more manufacturers, steel manufacturers, cement manufacturers are putting up facilities here. It drives down the costs of those supplies. More banks will have to cater to buyers who want home loans. They have to deploy more account officers here. So all of these effects of having more industry players in a certain market without saturating it, and to be able to have these supporting industries grow the market is going to be greatly beneficial for first movers like CLI. And then you put that into the background that there is just so much more demand than there is supply. If you look at the statistics of the housing backlog, we look at this, every year the amount of housing permits that the DSUD issues is not even enough to meet the demand for that same period. So what more the backlog that we have faced? So it now stands at 6.6. Before the pandemic, it was at 6.2. So this demonstrates that not only are we not making a dent in our backlog, we're actually adding to our backlog. So in terms of welcoming more developers in the Visayas and Mindanao region, I share Franco's sentiment. In fact, I actually think, geez, it's about time that you join the party. We have so many more houses to build. Even 100 CLIs won't be even enough to finish building the backlog demand of houses here in this region. So welcome to Visayas and Mindanao, welcome to Cebu, and thank you for helping us build up our industry.
Yeah, and I want to maybe add, because it's an important question about is CLI concerned that Manila developers are coming? And we've answered that we're very excited to welcome them here. Their launches are really in the high end or upscale market. No, they're buying these properties at the current levels, no, and these are mostly high-end launches, no, selling condos above 300,000 per square, which are quite steep for the local market, and you're catering to only a small segment. The nice thing with CLI, for example, we recently launched a project called North Grove. Pristina, we're able to launch at the mid-market because we're able to find properties that offer this good value. We're still able to offer some mid-rises in good locations close to the city center. So I think our ability to offer mid-market versus the high ends that the Manila developers are offering is our advantage that we really have here. Take the next question.
Yeah, there's a second part of the question that I'd like to address, which is, will there be another round of equity raising, and not just raising to further improve your DE? The second part of the question, to further improve our DE. Actually, our focus right now on being able to collect on our pipeline of collectibles and receivables and increasing our internally generated cash flow is the natural way of reducing our DE. It will just naturally reduce our DE because we don't have to, we will have the ability to pay down our debt or actually manage the refinancing much more easily. And as we create more net income from our pipeline, it will slowly reduce our debt. So we want to balance this out because the prudent use and the judicious use of debt is what has allowed an emerging company like CLI to take advantage of those rates, capture market share, and grow into the new markets. Will there be another round of equity raising? Well, not in the immediate future, but we are always strategic about opportunities out there, whether that be JV partnerships with land, which is a form of equity investments, or even strategic fund investors who might want to look at making a placement into CLI. Now, having said that, one of the things that we intend to do in the next 12 months is to use our approved shelf with the SEC to issue more, to issue bonds, retail bonds. No? And I just want to be very clear about this. This is more of a refinancing strategy that should take advantage of the lower interest rates and the rate cuts from the BSP recently. And it's also a chance for us to incorporate sustainability metrics and will allow us to showcase our sustainability strengths to portfolio managers and to fund managers out there who have that mandate to invest in companies with a strong sustainability strategy, such as Cebu Landmasters.
Okay. Another question is, how will the current residential oversupply in Metro Manila affect CLI's expansion into Luzon? And are there any updates as well on your Luzon expansion?
Yeah, the good thing, as we've explained to some who ask us now, we're definitely still on with our Luzon expansion. And this includes one horizontal development, the Cavite area, and potentially a condo development in Metro Manila. The good thing with our timing now is if we do acquire early next year, these are really inventory that will be available in 2026. So we are really expecting this Metro Manila oversupply to correct. Our market, our demographics is just too strong, and we will see that shining through, with our emerging middle class and people entering the workforce. However, when it comes to housing, we are very confident. We're looking at that more than 20 hectares or 2,000 units. For condo development, we're really looking at good value for money sites. The good thing about pre-selling is we in the VisMin market price well enough that the installment program over 4 to 5 years will allow these buyers to plan for their home ownership, and that's really what we're excited to bring. When you spread a down payment over a 5-year time, you hold the value at the now, and with the expectation that this value will really improve by its 5th year. So we're looking at that. So as I said, if we do acquire, we're looking at launching in 2026, and we're optimistic on the corrections that the market will experience in Manila. As I said, our demographics are just too strong for that.
Okay. Another question is, how do you see the outlook for lower mortgage rates given policy rate cuts, driving your outlook for take-up and launches?
Yeah, I actually see this question. It's from our friend Rusty Mercado of China Bank. So thank you for the question. And I think he asked some very some very smart and questions that really we need to unpack more. You've chose the third point, JR, and I'll address that. The lower mortgage rates can only help, obviously, can only help the demand and encourage more buyers to own their first home, especially here in VisMin where there's still a backlog. So that for me belies two things. Number one is that it confirms our own internal scans and our external market scans that there is not an oversupply in the housing market. And this is confirmed by the BSP. What we mean by that is the BSP, as the monetary authority of the Philippines, part of their mandate is to monitor inflation and make sure that there's not a housing bubble, right? So by them actually lowering their rates and allowing banks to lower mortgage rates is a signal that the policymakers and as well as the banking industry feels that there is much more room and many more buyers who should be getting a home loan and that we're not yet in a bubble. So how does it drive our outlook? Positively. We were showing earlier that we are already close to selling a number of 18 billion pesos worth of sales year to date this year compared to 20 billion for the full year last year. So we're confident that we can meet, if not exceed, those full year numbers. And that's for take up. And as far as our launches are concerned, we still have very good land bank, especially in our townships in Cagayan de Oro, in Davao, as well as very strategic acquisitions in our pipeline that will allow us to sustain our market share and be able to sell more into into this housing backlog.
Okay. What's the value take up of the launches in the 9 months of 2024, and do you have any updated targets for the year and of next year?
Okay. Team, can I request you to move to the slide on reservation sales, please? I believe that is in slide 9. Yeah. So to that question, what is the value of the take up and launches in third quarter 2024, 9-month 2024, and updated numbers targets for this year and next year? So we're still targeting to have enough take ups or to reach our, if not exceed, our take up of last year of 20.56 billion. So that's always been the target that we know we can increase it. In terms of our launches, we have a few more aces up our sleeves before the year is over, and given the excitement surrounding some of the launches that we are planning for November and December, there's a very high degree of confidence that we'll be able to exceed that.
And also in our press release, Grant, we've mentioned it. So we're going to start receiving reservations for our newest project, our new project in the Pristina or Talamban area. So that's over 2 billion potentially of revenue from the initial launch there. And we're eyeing a December launch for our maiden residential offering in our Manresa Township in Cagayan de Oro. So those are the two we're looking at. However, you see us also moving a lot of our remaining inventory in our other projects, and we just have less than 3 billion left to exceed last year's performance. So we're working hard to make sure it's exceeded.
Okay. Do you expect a pickup in year-end revenues, in particular lot sales in the fourth quarter?
Actually, I think the question is excluding lot sales, not in
Excluding.
fourth quarter. Yeah. And let me take that up. Lot sales in the foreseeable future will be a strategic part of how we will generate revenues and therefore sales numbers in the next 2 to 3 periods for CLI. And this demonstrates a focus on two things. No? As Franco mentioned, we have remaining inventory from projects that are finishing. So what we would like to do is to really be able to monetize those remaining inventory and sell them out. And so what you'll see is that, especially for older projects, even as they're sold out by 95 to 97%, the last 3 to 5% represents incredibly, an incredible opportunity to be able to sell and monetize those inventory without more capex. So that's really our focus in the next couple of periods. And do we expect a pickup in real estate revenues? The other thing is, again, with a dual focus on both delivery of projects as
Yes.
well as monetizing them, the POC will take care of itself, or the percentage of completion will take care of itself in terms of our
Yeah.
projects that are completing.
Yeah.
But in terms of revenue recognition, both will have a significant part.
Yeah, and just to point it well to the analyst, so you can see slide 19 of 35. So it's very visible. Now I appreciate how Grant makes it very visible. Just showing new launches, no, and how much we've sold from the last 12 months. Just let's show it to the. Can you move to that slide number? No, on the Zoom. Yes. So you can see here, right? Projects we've sold in the last 12 months now. We're basically 89%. We're 89% sold. Selling 10.72 billion. And we can only recognize revenue when they're above a certain collection percentage, accompanied by a good percent of completion. So it's very healthy, no? And these are not fully reflected yet in our first 9 months, and a lot of accounts will start to be recognized in the fourth quarter, no? From this healthy sellout of our new launches. So that's just one way to look at it. No? Okay.
Another question is, we noticed a dip in EBITDA margins, and that seems to be coming from higher OpEx. Can you provide more color on this?
Yeah, actually it's dual. No, there's both on the cost of sales and OpEx. That's inflationary pressures coming in, affecting that margin. Not significantly, or not to the level that it merits or it forces us to change in strategy. But again, the transmission mechanism of passing on these costs to the market and to our buyers, there's a lag effect to that. Meaning that just because fuel costs or utility costs and food costs are higher, unlike faster, industries with a much shorter cash conversion cycles, remember that our sales figures are relatively locked. They were from sales and contracts that we signed up and documented 2 to 3 years ago. So with this effect, there is also going to be a lag effect in terms of um, passing on the inflationary cost. So while especially OpEx is responding to inflation real time, it will take time for our sales price to adjust, and therefore it be reflected in our margins. But it doesn't change the cost of doing business because of our OpEx may have inched up, and it resulted in slightly lower EBITDA margins. You're right that it's a small dip, no, but it doesn't change the fundamental thesis of how we generate value and how we capture market share and how we give value back to our shareholders, because it's really, in real estate, it's a long game that you have to play.
Okay. Another question is, many follow-up questions. What is the percentage of your buyers do not rely on bank financing to acquire property?
Oh, sige, I'll take this one. What percentage of our buyers do not rely on bank financing to acquire the property? I would say around 20% would be able to pay in cash outright. And when you say, by the way, bank financing, I'm counting Pag-ibig in that mix. So Pag-ibig and banks combined is about 80% of our buyers. And so these are institutions that we partner with and that we work with incredibly closely. Just to show you a peek behind the curtains a little bit. In fact, we actually have exclusive commercial terms between banks and our buyers. So if you're a CLI buyer, you have the opportunity to enjoy preferential rates, a faster processing time, dedicated account officers to be able to process your home loans. And again, that is a function of our business model where we work so closely with our banks and our financial institutions to make sure that mortgages are within your reach. So it's about 20% to answer that question. Of course, if you'd like to pay in cash, that's more than welcome, and we will make sure that we can help facilitate that transaction.
Okay, I guess a follow-up to that is that just to expound more on the payment schedule, the 45-year payment horizon is just the equity payments only, and not the whole setting price value property is the question.
Yes. It's the partial. The equity payment is we collect it on, we divide it into about 40 monthly installments, so that at the end of this equity payments, you would have paid enough into your sales contract that allows you to be qualified for a bank loan. Keeps things affordable, keeps things within reach for the and affordable for the Filipino family.
This one is in terms of accounting booking. What percentage of completion do you use to book your entire sales?
It's proportional, meaning that we receive reports from our site managers, our engineering team, which is then audited externally. And whatever the percentage completion, whether it's 5% or 95%, that is the factor that we apply when we recognize revenues from a particular contract. So whether it's 20, 30, or 50, it is the factor that we apply per project, and we do this per project and we do this per contract. So I hope this drives home the point that why, if you look at our revenues and the remaining value in our balance sheet, this is what I say, it's a lagging indicator, or dare I say, it's an underrepresented value of the actual amount of sales that CLI has already signed up for, because such a large part of those contract values do not yet appear in our financial statements. We wait until the percentage of completion goes up. But I thought it's important for investors and our stakeholders to see the amount of collectibles we actually have in our pipeline. That's why we were also highlighting, aside from our balance sheet, our pipeline of collectibles of over 84 billion pesos. And that's just from contracted sales. So the static number as of today, we will continue to add to that number as we have more launches. Okay.
All right. Thank you, Franco and Grant. With no further questions, we now wrap up the session. But before that, we'd like to also acknowledge our media friends who is also present in this call, from Philippine Daily Inquirer, Philippine Star, Business Mirror, Manila Times, Manila Standard, Manila Bulletin, Business World, Daily Tribune, Context PH, and from GMA. Thank you so much for being present. You may email us. Also, you may email us your questions via IR email at ir@cebulandmasters.com.
Yeah, and just like one final takeaway, I'd just like to again thank you all. We want to express our our confidence in our first 9-month results. A few very positive takeaways: our highest positive operating cash flow since our IPO, over almost 5 billion in our positive operating cash flow the first 9 months of the year. It reflects our focus on really delivering, completing units, and taking out these units while still expanding at our healthy base to maintain that growth trajectory. Still growth in revenues in spite of the higher base that we're working with. Now we're already at the 20 billion range and growing still at 9%, almost 10%. Another most important fact, how we are an outlier, We are 96% sold across 40,000 units, no? There is no oversupply to speak of where we operate. And yet, we are still looking at the middle of market because we are confident in our capabilities, no? Our office is actually done there, and we need to set up a team there to look at those two projects we're doing. However, VisMin remains to be our home base. No? This is still the ripe area we want to take more advantage of. And as Grant said, with a prudent financial management, DE going down from our 1.8 times to 1.44 times in the first 9 months. So I'd like to thank the team. Grant, maybe last words before we close.
Yeah, again, think about the scale of how much more growth, how many more years, how much more room there is for CLI to serve the housing demand. With the 20 billion in reservation sales that we are on track to hit this year, that we already hit last year, by the way, that's about 4,000 houses or 4,000 residential units that we sold. So compare the 4,000 that we sold in a single year to the 6.6 million housing backlog that we still have to build, gives you a sense of scale of, why if we focus on doing what we do best, staying the course, and really, sharpening our value proposition in this industry, that we can look forward to many, many years of sustained growth and really serving the Filipino family. All right.
All right. Have a good day, everyone.
Yeah, we'll see you in Luzon soon, by the
On
way.
behalf of our chairman, CEO, Boss Joe, executive team, we'll see you at our full year briefing in April next year.
Thank you, guys.
Let's all look forward to that. Thank you very much.
See you guys.
Bye-bye.